Hey everyone, welcome to the GC360 podcast. I'm your host, Erica Becker, and on this podcast, we have some of the most interesting people around Garden City on this show. And today, especially, I'm excited because we are coming upon tax season, and so my guest today is going to be able to talk to us all about that. I have Michael Hunt. He is a CPA and a financial advisor. Michael, thank you so much for being on the show today and traveling all the way over here.
Thanks, Erica. I appreciate it.
Yeah, of course. So Michael and I met at a networking event recently, and you got up and spoke, and I thought that you had a lot of great things to say, some things that I had never even heard of. So I think it's probably a lot of other people haven't heard of it too. So I think it's really important that people know about some of these new things that have come about that have to do with finances and taxes. But before we get into that, first, a little bit more about you. How did you get into financial advising?
Well, so I graduated college about 300 years ago.
Oh, gosh. That is
with a degree in accounting. So I am a CPA, which is a certified public accountant. I started my career there and then transformed into, in the corporate world, doing risk management, risk assessment, and then I was asked to move into the investment world. So I took the skill set that I had as an accountant and applied it to the financial investing world at a corporate level. And then about 10, 12 years ago, I moved out of that role into more of a personal approach with families, individuals, small businesses, and it brought me back to my tax roots because the one thing that pretty much everyone has to do is consider the tax implications of everything they do.
That's true.
So it's come full circle for me, and what's nice is a lot of folks like to talk to someone who can help them identify a problem and fix a problem, and that's what we try and do.
And probably with all of your different experience with different areas of finance, that probably makes you a really good advisor, I would say, to help people with that kind of stuff.
I don't have too many people that are upset after we talk because I try and make it as simple for them as possible. And I think any type of individual who's in this role, the goal should be, what can we do to help you? That's the most important thing. And I tell people, I work for you. You tell me what your challenges are, what your goals are, and then we try and fix them or get you to achieve the goal in your timeline.
Yeah, that is how it should be. And did you always want to be a financial advisor? Did you like money as a kid? Like, what kind of got you interested in it, would you say?
Well, it's real interesting. So in college, I wanted to study I thought I was going to be a lawyer.
Oh, okay.
But then I played baseball in college, and my dad was an accountant, and I went to Hofstra. They had a very good program. I took to it, and that's just how it evolved.
Cool.
And truth be told, when I came out of school, I had less of an idea about the investment world and how to build a portfolio and how to make it tax effective, because that wasn't in the lane. But through a number of years of training and trials and tribulations, we got there. So I've got a nice bucket of stuff based on experiences that hopefully will benefit the folks that I work with.
Oh, I'm sure that it will. We're gonna get back into more of this a little bit more in depth, but we're first gonna take a commercial break. We'll be right back after these messages.
My father never stops moving, but after he had a brain aneurysm, he had a difficult time getting back to his normal routine. That's when I called Alliance Services. They paired him with Rosa. She developed a custom home care plan that helped him with his recovery.
Rosa helped me gain my independence back.
Alliance Services, helping older adults continue to live well and independent.
Hey everyone, welcome back to the GC360 podcast. I'm your host, Erica Becker. If you're just now joining us, our guest today is Michael Hunt. He is a CPA and a financial advisor. So we've been talking a little bit about your background and how you got into finance and everything. So let's talk a little bit more about I want to know what is the most interesting thing to you about your job, like what you have to do. What's a typical day like for you?
There is no typical day. So I think the most rewarding and the most challenging thing about what I do is every day can be different. And even if you think you know what you're going to do during the day, it doesn't always pan out that way. Yesterday was a perfect example. Crummy weather, spent some time working from home, and I had 6 or 7 things that I wanted to get done, but because of phone calls, because of folks having needs and questions, it totally got derailed.
Yeah.
And at 8 o'clock last night, I looked at my to-do list and I still had 3 open points. So when we're done here, I got to get back on those. I got to get back on those open points.
Yeah, you got stuff to do.
But I don't, there are some folks that thrive in the consistency of day to day, and that's great. This career, this profession changes on a dime's notice because everyone is different, and it's
true.
dealing with people, it's dealing with personalities, and it's dealing with process, and it's dealing with taxes and finances. So
Yeah.
there's no two things that are the same.
Well, I thrive in change, so I think that if we have that in common, if you are liking that every day is a little bit different, it's a good thing. And I'm sure that it couldn't be the same for you because people who have different jobs, you probably have to go through a different process, right, for different types of things. Is there a specific type of career or lifestyle that's more complicated to do for taxes?
I would say this. The individual, the family, if they're basic, there's a simple way to approach it. But until you, and I hate to use this expression, but peel back the onion, you don't know what you're going to find. Everyone's situation is different. It depends on age.
Yeah.
So as folks get older, and one of the topics we may talk about is what happens when you get to retirement age. How's all that money that you set aside during your career, how is that taxed? And why is it taxed a certain way? And
Yeah.
what implications does that have? So really it's getting to know where you are in your life's journey, the type of work that you do. So some employers will pay you with a W-2 form, and some employers will pay you as a consultant or a 1099, or you may have your own business. There are all tax ramifications to each of those that we have to look
Pay
at.
attention to.
Yeah, exactly.
Definitely. Let's talk about the retirement thing because I've been recently thinking about that with my Roth account that I have. So what does happen whenever you get to that point?
Sure. So
Yeah.
categorically, there are 2 types of money. Qualified, which means it qualifies for certain tax treatment, and non-qualified, which means it doesn't qualify for special tax treatment.
Okay. What makes it qualified or not qualified? Is there one thing or is
Yes.
it like a lot?
Yeah. Has it ever been taxed?
Oh.
So if you have a checking account, the money that's in your bank account conceptually has already been taxed because you've earned money, you've paid tax to the government, that's what's left over.
Okay.
The stuff that goes into a retirement plan, whether it's a traditional IRA, a 401k, a 403b, that's pulled before the taxes get taken out. So what that does today, it lowers your taxable income today, but when you use it in the future, it gets taxed.
Oh, okay.
So good and bad.
Yeah.
All right?
Yeah.
So you mentioned the Roth. The Roth is something that was developed in the 80s, I believe, and it allows you to put after-tax money, non-qualified money, into an account. And as long as it sits in that account for 5 years or more, when you use it in retirement, it's 100% tax-free. So we like to recommend to folks that are younger, that have a longer runway, definitely put some money into a Roth or a Roth-type vehicle, because in retirement, everyone's going to have taxable income. Some may have partially taxable income, and everyone wants tax-free income.
Yeah,
so why
of
not
course.
try and set that up today?
Yeah, that's exactly what I was told recently. So, and I also know that you can take money out of it before age 55, but if you do, there's a big penalty or something.
You're talking about
right?
a Roth.
Yeah.
The rules are different for a Roth than a traditional IRA.
Okay.
Typically, you can take out, under certain circumstances, what you put in, because that's your cost basis without penalty or tax. If you take the growth out, that's where it becomes a little complicated.
Okay.
So one of the things that's really important, if someone needs to access money, talk to your tax professional and get an idea as to what the tax ramifications would be if I take it out of bucket A, B, or C, so that you're making the right decision, because you don't want to do something you cannot undo.
Yeah. See, this is why financial advisors are so important, because I would have not known any of that. And you touched on a few points whenever you spoke at that networking event we were at. And so I kind of want you to elaborate a little bit on some of that, because I think some of the things you talked about were pretty new that probably a lot of people won't be aware of.
So what I tried to do at that event, because there were a lot of small business owners, is start first with some things that small business owners should be paying attention to, and then bring that to the individual, because all small business owners are individuals at the end.
Yeah.
So where I started was talking about a small business deduction that every small business owner will be entitled to as long as they have income below a certain level.
Okay.
It's called the Section 199A deduction. Doesn't matter what it's called. The thing that's really important for most folks to realize is unless Congress changes the law, it goes away at the end of 2025.
Oh, wow.
And what it does, it gives small business owners the ability to get an automatic 20% deduction from their business income. Pretty good. Mm-hmm. So we don't have to get into all the weeds, but just be aware that you have it. And if you're not aware that you have it, please talk to your tax professional. They'll explain it to you. They'll even work with you to make sure you can get the most of it if you're making too much money, which is not a bad thing. But there are ways to go have it.
Yeah. So small business owners, you hear that? You got to talk to your tax professional, because that's important. And you also talked about something I remember, the Secure Choice Savings Plan.
Yeah, so New York State passed the law, I believe it was in 2020, it was implemented in 2021, but the wheels of justice grind slowly. It basically says now any employer in New York State that has 10 or more W-2 employees that meet certain hourly requirements, 20 hours a week, I believe, or more, the employer now has to make available a retirement savings plan. Have to, not a choice, or the employer gets fined. So some of these things can be costly or not costly, depending on how it's structured. Again, I recommend that if you're in that situation, you're not aware of it, please talk to your tax professional, because they should understand how to guide you.
Yeah.
And I just bring up one other point, because today's March 1st. Most folks only talk to their tax professionals during tax season.
Yeah.
And tax professionals are real busy during that time. So I would encourage everyone to build a relationship with who your tax professional is so that you can talk to them in off-peak times, because preparation of the return is good, but planning for the preparation of the return is equally as important, and that's best suited when they're not as crazy.
Yeah, and I think that's probably where a lot of people fall short. I'm sure that you've experienced that.
People go to the doctor when they're sick, or when there's a flu. And, that's just, it's human nature.
Yeah, definitely. So would you say that that plan that came about, that you said it started in 2020, but it didn't really come into effect
The law got
2021?
passed in 2020. I believe it was set to be implemented in 2021. But I don't believe there's been any follow-through by New York State. Oh, and by the way, New York City, it's not 10 employees, it's 5.
5.
For New York City.
Wow.
So if it's a New York City employer, just be aware of that, because you don't want to set yourself up for penalty.
Now, do you think that came about because of what happened with the pandemic, or was that already being set in motion before?
That's a great question, and that kind of is going to lead into the last topic I know you want to talk about, but I'll touch on it briefly now. Most folks, when they retire, rely on Social Security. That's the government's retirement savings plan for folks when they get to retirement age. There's a lot of speculation that Social Security could be running out of money or not. That's a different topic. That's a different day. But the government wants to incentivize individuals to sock away as much money as they can so they're less reliant on the government. So if you have more money in your piggy bank, you don't have to go to mom and dad and borrow more.
Yeah.
Or ask for more.
Right.
So this is part of the state incentivizing small business owners to put plans in place for their employees, because large corporations, they'll have the 401k, they'll have the 403b if it's a nonprofit. But smaller companies don't focus on that because they're focused on day-to-day operations. So it's the government's way of forcing this. But it's forcing a conversation, which is good, but none of these plans are one size fits all. So again, it's important to talk to somebody who knows what they're doing to give you as a business owner the right guidance as to what plan is best for you.
Yeah, definitely. And so how else do you think that the pandemic, what did you see, how did it affect your career, your job, your day-to-day, and also just in general, how did you see it affecting people financially besides
Sure.
the obvious? We know it was tough.
Well, I think we were talking about earlier, one of the best things that came out of the pandemic was people now can be much more astute and adept at technology.
Yes.
So there's the ability to have video conferencing. It saves a lot of wear and tear on cars and spending money on fuel and all that other stuff. And it's also convenient for a lot of folks that are comfortable with it.
Definitely.
But one of the things that did come out legislatively from the pandemic were the changes in certain tax laws. And there's a concept called RMD, required minimum distribution. What that means is when you get past a certain age, the government says all that money you've built up for retirement, now you have to start taking it because they want their taxes on it, because it's never been taxed. So they adjusted the RMD for 2 years. They said you don't have to take an RMD because folks they weren't sure financially how they were going to do.
Yeah.
They gave the triple P loans. They gave stimulus packages to individuals, et cetera, et cetera. What they also did was they pushed back the age that people had to start taking money out of their retirement savings account. So a couple of years ago, it used to be the tax year, you turned 70 and a half, and I have no idea why they picked 70 and a half.
And a half?
And a half. You had to, there would be a bucket of money that's never been taxed, and the IRS would say, okay, starting that year, you have to start taking some of that into income.
Okay.
And each year, as a percentage, it went higher. During the pandemic, they pushed it back to age 72. Okay, it's a round number.
That makes more sense to say 72.
Effective January 1st of this year, they pushed it back to 73. And in a couple of years, they're going to push it back to age 75. So people are like, that's pretty interesting.
Yeah, it is.
A lot of people are happy. Wow, I can spend more years building up this big nest egg. And you can. Is that good or bad? Well, the largest untaxed asset in this country are individuals' retirement savings plans. So if the government gives you an extra 3 to 5 years to have it grow, they get more tax revenue.
Yeah.
So it can be good, again, but it goes back to the proper planning and understanding the tax ramifications of how to do things.
Yeah, definitely. And I'm sure there are some people who think about, the lifespan has gotten longer, but still, when you're 70, you might only have 10 more years. Like, if they keep pushing it back too far, it's kind of like...
Well, and one of the other things that came about as a result of this new law, it used to be that mom and dad or grandma, grandpa, they could leave their retirement savings accounts as a beneficiary to their kids or their grandkids. Well, now if they do that, there's a different tax implication. It used to be those funds could be taxed over the recipient's lifetime.
Okay.
Now, for the qualified money, if it goes to a non-spouse, child, grandchild, mailman, whoever, it doesn't matter. Now it all has to be taxed in 10 years or less.
Really?
And typically that recipient may be in their highest earning years, so they're in their highest marginal tax bracket, so the government gets more money.
Yeah.
So there's a lot of wacky things that have come out.
There are, yeah. That's a lot to wrap your head around.
And it can be very cumbersome. It's just, again, I can't stress it enough. Make sure you talk to someone, talk to your tax professional so that they can at least guide you as to what you should be thinking about.
And something you made a point about that I thought was important and true is that your relationship with your tax advisor is also very important, not just what they're doing for you as, what you're hiring them to do, but trusting them understanding your habits and your job and your money. That's just as important.
I heard something the other day that somebody said the three most important people in your life should be your barber or your hairstylist, your doctor, and your tax professional.
Yeah.
So because...
Honestly, yeah. Your tax professional is like the doctor of your...
Well, I tell people, if I were to ask you what's the most important thing to you, you'd probably say your health. Shouldn't your financial health be a close second behind that? And getting all of the right people to help you with that, to understand that, because most folks don't do that. They run their businesses. They do whatever they do with their families. That's not what they're supposed to be the expert in. So find someone that you can trust. Find someone that you can talk to that will not only help you identify your goals and objectives, but help answer the questions that are important to you.
Yeah, definitely. So that being said, besides taxes and financial advising, what else does Michael like to do?
Oh, heavens. I mentioned earlier I played baseball in college, and up until a number of years ago, I still played baseball. But as a catcher, my knees can't handle it anymore, so I hung up the spikes because I don't want to have to get knee replacement surgery.
Totally. It seems you are somewhat of an athlete based on what we've talked about.
I dabble.
Yeah.
I used to train and teach in martial arts, and as I mentioned to you, we were out in Utah a couple of weeks ago skiing. So love to ski. If there's snow, which there is none in the Northeast this year, but there's a ton out west.
Cool.
So a healthy lifestyle, exercising, doing some things that you can do without waking up the next day having to eat a bottle of Aleve or Advil is a good thing.
Yeah, definitely. You got to be balanced for sure.
Absolutely.
Awesome. Well, Michael, you definitely answered a lot of my questions. I'm sure our audience learned a lot from you. And I know you have a lot more knowledge that we could never even finish in a day. So if people want to get a hold of you, if they have other questions,
Sure.
What's the best way for them to contact you?
There are two ways. We could actually use, we have a website, www.huntcpapc.com. Okay, that's the website for our tax business. My brother and I have it. We share it. We run it.
Oh, great.
All of our phone numbers and contact information is there. In the process of evolving and developing, social media specific pages, and that's to follow, and there'll be links on that website when they get set up. But I think going to that website initially is probably the easiest way for folks to figure it out.
Awesome. Great. So everyone get on it. I know we're approaching tax season. You're on the cusp. So definitely get a hold of Michael or your tax advisor to get things going. And again, Michael, thank you for coming out and talking to us. I know everyone learned a lot, and it was a good conversation. And thank you, everyone, for tuning in to the GC360 podcast. This episode was sponsored by Alliance Services, and we will see you next time.
Season's greetings, everyone. Erica Becker here, your host at Garden City, New York Media. I am very excited to announce that I'll be providing acting classes for young people in Garden City in 2023. To stay updated and for more information, visit our website at longislandacting.com. Thanks so much and happy holidays.